Today it's a visit to the JSE, the stock exchange, where I'm with Graham Smale, who's Director of Bonds, Financial Derivatives at JSE. It's the casino of shares and finance, really, isn't it?
Well, we provide the infrastructure for the people who are taking the positions to make the money. So in principle, we're the house, in the sense that we sit at the middle and the people around the table are placing their bets. And
maybe a bit of a silly question, but are you, as part of the house, allowed to play the game?
The exchange itself, so there's the individual and then there's the organisation. The organisation itself is never involved in a position in the marketplace because we sit as an infrastructure in the middle. I suppose an analogy for the stock exchange is like a telco provider like MTN or Vodacom. They sit in the middle sending SMSs between people and they take a small fee per SMS. But the people trying to communicate or trying to take a position are on either side of the exchange and use the exchange infrastructure for the purposes of doing that. As individuals within the exchange, there is a policy in terms of personal dealing, and there's a very strict control on how it's done within the exchange.
Yes, because a lot of people don't understand that terminology, insider trading, and that would apply really in your situation.
Correct. So insider trading is really about having information that is not in the public domain and utilizing it for personal gain. So there are parts of the exchange where, for example, in the corporate finance listings division, they have access to information on behalf of companies that are doing corporate actions out there, and therefore that is definitely insider information. So, for example, that division has no trading ability whatsoever.
Do you see a great future for the JSE in this part of the world? Do you see us ever becoming as great as the Wall Street stock exchange, for instance?
Very much so. I think we benchmark ourselves against the best in the world. For many years, under the previous CEO, under the current CEO, Nicky Newton-King, we look north to the first world markets for the standards of what we represent. And in certain respects, we are sometimes even better than overseas exchanges. For example, in our listings requirements, we're as good, if not better, than many parts of the world.
We're in a bit of a unique situation in this part of the world because we're seen as the economic powerhouse of Africa. If one looked at the United African States, have we grown a full potential here at the stock exchange, or is there much to go?
No, there is much to go. It's fraught with a number of problems. We're so big that we dwarf many of our counterparts or similar organizations across the continent. And so the relationship is not necessarily one of peers simply because of size, and that applies both at the exchange level as an organization and as a country. So I think many countries in Africa look down to the tip of South Africa and at times look at us with a bit of a jaundiced view because of our size and want to chart their own paths, which is a very personal thing and in many respects very understandable.
Tinged with a slight touch of jealousy, I would imagine, as well. Let's move on now to why the JSE is performing so well in its own right as a blue chip share.
Well, I suppose if you're looking at the performance of any company, one needs to understand what drives the success of that company. So at a very simple level, we get revenues, which comes from the volumes of transactions that other people are taking in the marketplace, and then we have a set of costs. So if you have to look at the success of this business, it's driven by those two factors. So if markets are not performing and people are not taking positions or trading in the marketplace, we as a business still have a fixed set of costs, and therefore we would underperform. So it's a balance between what happens in the marketplaces, the kind of activity people are trading, developing new products to attract people to trade new things, finding new clients to trade existing products, and then off the back of that, managing our cost base. So we, as I said, we benchmark ourselves against the best in the world.
Yeah, if you look at the exchange rates at the moment, they are very volatile.
Yes.
And that is causing a shocking imbalance in the marketplace. Budgeting must be almost impossible for many companies.
Yes. So the exchange rate is, we have a very open exchange rate. So and we have a fairly liquid currency market, so people can move in and out as they wish. So as Marikana happens, people will be deciding to sell local assets. As our yields look good and stable, people will be looking to buy our bonds. So there's very little a country like South Africa can do with its exchange rate.
What do you think about exchange control?
There's the kind of laissez-faire view which says, look, it's not a good thing, one must get rid of it. But in many respects, the current structure of exchange control is very open. Foreigners can come in and go at their will. For the individual, unless you are a very, 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 very high ultra net worth individual, you can take more than you can assemble in and out of the country. The corporate sector and pension funds and asset managers have more control around it, but I believe that our exchange control regime is not onerous. There is continuing signals from the policymakers that it will be relaxed in an appropriate way. And so we continue to work with authorities on those aspects of exchange control that impact our business, for example.
Let's move on to government now. Do they perhaps have too much money tied up in bonds?
No. Around the world, we're in a cycle where governments are issuing bonds left, right and centre. And as you see, that's what drove the crisis in Europe and the debt ceiling in place in America. South Africa, going into the crisis, had on a sustained basis maintained its debt levels at low levels, which actually gives us the capacity at this point to issue new bonds in order to invest in a lot of this infrastructure we need to do. So our levels are very sustainable at the moment. But that's a number that changes year by year as they need to borrow more money to fund the twin deficits.
And now to something much closer to your heart now. What are the benefits and challenges in trading in the derivatives market?
Well, derivatives per se, for a lot of people, have a bad name. From Warren Buffett saying they're weapons of mass destruction in the financial markets. And a lot of it comes from misunderstanding on what the issue is with a derivative. At the end of the day, the issue of the derivative is leverage. And it's the risk of leverage that's fundamentally the problem of derivatives. So the exchange has a number of products which enable people to access exposures or to get rid of exposures. And it's accessed through the traditional broker network as you do with underlying shares. But the thing to understand when you move across from paying 100 Rand for a share to trading 100 Rand's worth of a share in a derivative is that you're assuming leverage. Because when you do that, you only pay about 10 Rand for the 100 Rand's worth of exposure. And as a result, it comes with the leverage risks, not fundamentally that the product is bad.
Let's move to hedge funds. How sustainable are they in these, most people would say, uncertain times?
Hedge funds will have their place. They're I suppose the way to style is they're an exotic investment mechanism. At the end of the day, there are people who are good at figuring out which way prices are going, and they do it in a particular way. So your traditional asset manager generally is long the marketplace. In other words, he owns the market, and in order for him to make money consistently over time, the markets have to consistently go up. And he tries to sort of game the system by moving out of the market and into cash to try and keep that return. A hedge fund player uses leverage, and they also have the ability to make money out of markets going down. So a hedgey, as you might call them, he doesn't mind which way markets move. If he thinks a particular sector or a share is going to go down, he will then take a position which allows him to benefit. So it's an exotic way of investing. It comes with associated risks of leverage that apply to that, but they're an appropriate avenue for investors of the right type. As with anything, you need to know what you're buying.
I'm going to finish this interview off with a most unusual question. I'm sure you haven't been asked it before. There are many wealthy men, businessmen that I've come across in my travels in South Africa and the rest of the world that just don't understand the stock exchange. If I give you this opportunity now to encourage them, how would you explain to them that they could understand it and what the risk is and levels of risk?
You're right. This whole world that we live in here at the exchange, and our partners being the brokers, the banks, and the distribution mechanisms with which the instruments on the exchange get accessed, we've done a pretty good job at trying to keep this thing complicated. At the end of the day, it just requires a lot of digging. A company is a simple thing so thinking of shares. A company is a relatively simple thing. It does certain things. It tries to sell those to people. And at the end of the day, it has costs associated with delivering that. And what one needs to do is dig. You've got to just gather information. So part of the problem is that we want the success of investing, but we don't want the pain of spending the time. It just takes time. You've got to dig, look for your own information, and I suppose, look for advisors, but you've got to develop your own level of sense of what is right and wrong. Ultimately, you have two choices. You either don't invest, you give your money to invest to somebody else, and you trust them that they're going to get it right, or you spend the time to dig, gain the information, and understand. There's no substitute. You can't get the returns without making one of those three decisions.